Hi there, this is Sandra with the Mortgage Center. This is a message from my office. I love being proactive with the communication that we give to our clients. So I just wanted to share with you some of the tips and some of the things that we're seeing currently in the housing and the mortgage market. And whenever we share this information, the whole philosophy around the Mortgage Center is just to help our clients get ahead. So one of the things that we're seeing at our office is that we're doing more and more alternative financing. So this is financing that wouldn't be with a regular charter bank like a TD or a Scotia, or we also do many mortgages with wholesale banks like MCAP and First National. You might recognize those names. So the reason why we're doing more and more alternative financing is because primarily because many self-employed people have written down their income on their personal income tax returns, and it's an accounting thing. And a lot of financial institutions do not look at gross business income, but net business income. So many self-employed people say, "Oh, you know what? This is just an accounting thing." But I say to our self-employed people, like, you can't have your cake and eat it too. So that's one of the reasons why we're doing more and more alternative financing, and especially with COVID and how people's incomes have changed. As you might be aware of, the qualification for mortgages has changed. The stress test is actually increased, making it more difficult for people to get financing through the bank. So if you've gone directly to your financial institution and they have declined you for a mortgage, never fear. There are some really good options. We've also seen people, some of our clients struggle a little bit with credit history. They say, we've made all of our payments on time on our credit cards and lines of credit, but what's really affecting people's credit history as well is high balances. So if the balances are more than 50% of the value, or the balance is close to the limit on the credit facility, that's going to adversely affect your credit history. The other thing that we're really kind of coaching our clients through is whether or not, most common question I get is variable or fixed rate mortgage. And I think that depends. I personally have a variable rate mortgage on my house. But I work in the industry and I'm willing to take that risk to get a better rate. So there's quite a difference. So for example, like there's almost a % difference on variable versus fixed rate mortgage. Many of our clients are choosing fixed rate mortgages because they just want that stability. Rates will be going up probably sooner rather than later. So we kind of want to keep that in mind. I always tell people, if they're going to be choosing a variable rate mortgage, to pay the mortgage at a higher payment like they're paying at a fixed rate mortgage. And that extra money goes towards paying down on the principal. So if you're interested in kind of picking my brain about that, I'm happy to share that information with you. The other thing that we're seeing is that a lot of buyer fatigue, and especially with our first-time home buyers. I think we've probably in the last 6 months, we've done over 150 mortgage pre-approvals. Can you imagine that? And what's happening is that within the increase in prices, buyers are, one, reaching their ceiling or limit on what they can afford, but also just some fatigue around multiple offers and stuff like that. So we've actually had some clients put offers together with conditions, with a financing condition. Can you imagine that? Or maybe they were the only client who put an offer on that property. So my encouragement to you today is, if you've been pre-approved, in the last year, we'd love to reach out to you and revisit your pre-approval, because I think there might be an opportunity here for you to actually buy a house. And then finally, I think another trend that we're seeing as things start to open up is that this whole idea, like we did have a ton of people moving from the GTA into Guelph, Kitchener, Waterloo, Cambridge, London, because they thought, oh, we're working from home, we need a bigger place, but I think what you'll find as things open up is that employers will ask their employees to come back. So I don't think we're going to see as much pressure from outside the area, and that influence of home prices and net migration from the GTA will slowly start to subside, because that's not a sustainable thinking, because your current employer may allow you to work part-time from home, but maybe your next employer won't. So again, I think that kind of goes back to the opportunity that if you are looking at buying a house, whether or not it's your first house or you're moving up, there may be some good opportunities in the next 6 months to purchase, because rates will be low and stable. So if you are looking for some good advice, we are always here to help. You can contact our office through my website at skipthebank.ca. There's a button on there, and you can schedule a 15 or 30-minute telephone or online appointment. We continue to meet our clients online and over the phone, just because that's our new way of doing business. So looking forward to connecting with you, and thanks again for your support.